Hey traders, Raghi here, and just in case you didn't know, and the information is on the email that this video is on, I'm having a webinar tomorrow at 8 o'clock Eastern, 7 o'clock Central tomorrow evening. It will be recorded, but go ahead and register so you can either attend it live and ask me questions live, or if you register and you can't attend live, the video will be sent to you after the webinar concludes. So I'm looking forward to seeing you there. And the reason I mention this, other than the fact that I'm totally stoked for this Follow the Money webinar that I'm doing, it's a free webinar, by the way. And if anyone has attended my free webinars before, gang, I definitely bring it. We talk about current trades. I walk you through my trades, the narrative, the entries, the strategy, bring pen and paper because it'll definitely be a session that's going to walk you through a handful of trades that I'm going to take you through right now. So this will be actually a great primer for tomorrow's webinar. So first of all, the Dow. I'm long the Dow. All you hear about is the Dow lower, and that's true. If you look at the highs that the Dow is correcting, that's very true. The Dow is lower. But it only matters to those people, quite frankly, that were looking for higher highs without a correction, or it only matters to people who bought from this level up here. Not so smart. It's the worst risk reward ratio on the chart if you're looking at a daily. Where did I buy? These two blue lines. In fact, we did it live in the SFX room, and then we did it live in the SO room. And these were buys from 17,651. Yes, I did step out in front of size by 1 point, but sometimes that makes a difference on my fills. And then down at 17,580. Now, both these entries are what I would call just a classic swing buy. In fact, they were not only classic, they were very conservative, meaning I took these entries at the 34 EMA on the high and also the 34 EMA on the close, which are the green and blue lines of my wave. Anything above the 34 EMA on the high, which is again that green line, would be considered aggressive. So I did not take any aggressive trades. One of the reasons I liked the trade that we saw here on the 29th was and actually that wasn't the 29th, that was right here, 429. Yeah, that was the 29th. And one of the reasons I like this trade is if you go back to last Friday, that was the last trading day of the month. And in terms of the volatility and the range, what I felt we were going to see was the correction start to take us through bullishly into May, and that's pretty much what we've seen. The thing I want to make sure is I keep an eye on the narrative. And the narrative is going to be dictated by Mario Draghi that was already today, that already came and went. So I'm not too concerned about Draghi derailing the uptrend on the Dow. Then the dollar continuing to stay weak, along with, I believe, a June Fed Fund futures that continues to stay strong, or pretty much nowhere near this 200 period simple moving average and the 99.50 area. That bodes well, I think, for the uptrend as well. And I know that we had a pullback in crude, and I think there's a lot of people making a lot of this move, but I think this crude oil market is still one to buy. Not necessarily from the current level, although it seems to have slowed here. The rejection from the 200 period simple moving average, or as you can see there, I have 200 smack exhaustion, should not have been surprising to anybody. What is going to be, I think, the trickier part of this play is, can we get down to the 13 EMA at 44, or can we get down to the 34 EMA at 43 and trigger an aggressive or conservative, respectively, swing buy? So even though I'm expecting prices to go lower, please hear me, I'm not a bear in crude. I need the correction to one of those two levels for me to trigger a buy. So it's those corrections, it's those swings that give me opportunity. Now, I'm also looking at the intraday time frames, the 15, the 30, and or the 60 for what I call a wave reversal. Because if I can get a wave reversal, and I don't really have a clear one right now, so I'll continue monitoring these, but if I can get a wave reversal, it might give me an opportunity to dissect the larger end of day daily candle and see what's happening inside of it to get a better feel for where those battles are being fought at the particular price levels. And if there is an upswing that's going to happen, I'll see the early signs on these shorter term 5, 15, even 30-minute building block time frame. So again, I want to be a bull here, and I think that bodes just fine for my overall long position in the Dow. Now, the long position in the Dow, I want to remind everybody, I took an optional profit target out at 17,749. So yes, just like I stepped out in front of size to enter at 17,651, I've also gone ahead and stepped out in front of size to exit in front of the 50-point level at 17,749. The next level up I'm looking for is 17,840. But what's great about having taken profits off the table here is I've moved my stop to a break even. Why is that so important? Well, it gives me the latitude to be a little bit more greedy about my second exit, my second profit target. Because if I was very greedy about my second profit target, or my first profit target, let me say that again. If I was very greedy about my first profit target, that would leave me in the unknown of unrealized profit or unrealized loss for a longer period of time, and it would not allow me to, one, pay myself, and two, move the stop to a break even, both of which are key components not to trade management, but to risk management. Because once I can call a trade a winner at a logical level that's either technically based or price-wise based, I can ratchet my stop. And that's so key to managing a winner as such, which means we don't let a winner turn into a loser, hence the break-even stop loss. The dollar and the euro continue to be huge winners for us. These were trades that we've taken in the room that go back to the 22nd. And the great thing about the 22nd, I believe we set this up, 23rd, it filled. I like to mention the difference between the day that we park these pending orders and when they trigger. And I'll probably leave you with this thought. Do your trades have shelf life? It's something that I pride myself on having, because I want there to be a minimum of about 6 to 8 hours before the trade triggers, and ideally maybe a day's worth of a heads up between when we talk about it in the morning chat and I possibly post a chart in the members area forum and we post it on the trading log until you can take a look at it, you can do the work, see what I'm doing, and then place your conditional order. And to have anywhere from 6 to 8 up to even 24 hours or more is what I call a reasonable amount of shelf life. I mean, nothing's worse than not, checking in. I figure most people can check in once or twice a day at minimum, but nothing's worse than checking in and realizing that you didn't have but a few hours to find and understand and then respond to the trade. I don't like to put trades like that in the members area. I want there to be some shelf life. So I'm pretty proud of the fact that we had about 24 hours between the setup and then the entry. In fact, I'm even prouder of the fact that even though I got 12.55, some of the members actually got 12.20, got a 30 pip price improvement. And when you talk about that across 2 or 4 lots, that's a pretty significant amount of pips. So we've taken the 12.55 entry. Some of you took 12.20 as a pressing validity. We took that to 13.05. We were very preemptive and very cautious about making sure that we could take some profits off the table and move to a break even. 13.45 was another level that those of you with a little bit more risk tolerance could have taken. And another thing that I want to mention here is look at all the optional targets that we have here. It isn't one size fits all. If you have a higher risk tolerance, we have a level for that. If you really want to reel your trade in pretty soon, I give you options for that. Now what's great is we have better than a 2 daily PMR cushion. So now we get to go into trailing stop mode. And now that's great because we have a safety net that's following the Euro US with about a 1 daily PMR cushion. We keep from smothering the trade. It's all very tactical, and it's all built on a 68% probability of what the Euro US is most capable of doing. So I know this video has run a little bit longer, but I want to give you just a taste of what we're going to dive into in much more detail tomorrow in the webinar. I'll talk about my position in the Aussie US. Unlike the Euro US, which I'm willing to back off and manage now as a winner, I'm actually thinking about hitting the eject button on the Aussie US, saying, you know what? Let me wipe my hands clean of this one. It's been a good winner for us from 75.55. In fact, we did this one on FOMC Day live in the afternoon breakout session. So a lot of you got to see my Dow entry live. You got to see my Aussie US entry live. And I love when you get to see the discussion and then price action hits. It makes the trade, I think, a whole lot more memorable and a much better teaching and learning type of trade. And of course, it makes it a very profitable trade for those of you that followed me in. All right, so that's tonight's video. I know it ran a little bit long, but I want you to understand some of the thinking behind some of the trades we have, and I'm going to dive into the narratives, the setups, and even more in the webinar tomorrow. Hope to see you there.